We're continuing our coverage here at the Metals Investor Forum, and my guest now is John Kaiser of Kaiser Research. He's a keynote speaker. John, welcome back to the show.
Glad to be back, Danielle.
Yes, well, I know you're going to be giving a talk tomorrow centered around how we've had 7 years of what you call famine in the junior mining space. So what awaits us next? Is it extinction, as you say, or a feast?
There are no reasons to expect a feast to surge upon us in any big way. But I think we are in the middle of a turning point, the beginning of what will be a revival of interest in the junior resource sector. And there's not going to be any glorious trigger. I do think gold is going to develop a subtle uptrend, and the key inflection will be when it goes through that 2016 high of 1370 or thereabouts, and convinces the audience that the trend is finally in the right direction. Not so fast and that the optionality plays kick in, but at a pace where the audience comes back and focuses on discovery exploration type stories.
So, John, we're speaking here the day before the PDAC, the world's largest mining conference. It's really seen as a barometer for the rest of the year. Do you think it will be well attended like we've seen in past years? Do you think the investor appetite is there yet?
This is more a industry conference, not a retail investor conference. Back in the days like 2008 and even earlier, there would be very large retail audiences present on Sunday during the newsletter presentations, and we would then have scrums afterwards. We'd have to run away.
Well, I remember in 2011.
Yes, that was when everything peaked. Yeah. And that's been diminishing every year, and I do not expect it to be any better this year, because last year we didn't even have the PDAC curse, which is the tendency of the resource juniors to go down.
And we haven't spoken about that yet. Is it a real thing?
If you look at the charts, there's always a New Year rally in the junior resource sector, as everybody says, okay, that horrible year's over now. Now we've got an upward trending, a new year, things are going to happen, and then boom, down it goes. And it's only been violated a few years, 2003, 2006, 2009, 2016. But last year, we didn't even have a first quarter rally. It was completely dominated by blockchain and cannabis. We haven't had a rally this year either, so there's no PDAC curse this year either. There's nothing to come back down from.
But miners outperforming gold so far this year, the opposite of what we were seeing last year.
Yeah, the obsession with the gold trend is terrible. I mean, gold right now from 400 in 1980, it's 1248 is the inflation adjusted price. So even though it's nominally a lot higher than 260 back in 1999, it's all high hanging fruit. But gold's starting to creep up in real price trends. We don't have any meaningful inflation. This is what I think the miners are starting to see is this.
But John, when you say the obsession is terrible, what do you mean by that? Like chasing the price?
It's always, if gold is trending up, that's great. Oh, gold had a bad day. Like last few days or so, it's had bad days. So all the excitement seeps back out of the market, which is nonsense, because at the level where gold is now, it needs to get to 1800 before the trend is actually interesting for those ounce in the ground plays that aren't working now. But I think the sense is gold's back and forth, up and down since it retreated from 1900 to 1050 back in 2013. The feeling is now it's in a long-term uptrend, and part of it is it's not so much fear of inflation, fiat currency based, all the stuff that everybody talks about. It's a different type of uncertainty about how the New World Order established by the United States after World War II is coming unglued. We're going back into kind of big power conflicts. Globalization is under attack, and the reign of the U.S. dollar as the primary currency for the world. People are questioning: is this safe? And they would like it to stay that way, but now that the United States is behaving like a thug country on the global stage rather than this subtle soft power persuader, everybody's thinking this relative decline of the United States is being accelerated by the current policies, because there's going to be pushback, there's going to be Humpty Dumpty effects where things happen that you cannot put back together again. And so there's a very broad-based demand for gold emerging as a sort of hedge, and this will drive a higher real price, not just an inflation adjustment or a adjusting for the U.S. dollar declining, because and this is what I think is going to drive the juniors, the earlier stage ones, because the game is to find things that work at the metal price you have, but it's a lot better when that metal price is creeping higher in real price terms, because then if something that may not be so great today could, in a couple of years, when gold's at 2,000, could be worth an awful lot. So the risk capital will come back into these earlier stage projects, and especially focus on systems where there's already something there. Maybe there's even some ounces in the ground, but the idea is to bring new geological ideas and methods to play and find something bigger and better and different that's somewhere in this general geology associated where we already have something. And so there you get a good chance of providing news flow that encourages the market, and if gold's trending subtly in the background, the glass is half full for the exploration stuff, and that's the big switch over that I think is going to happen in the next quarter.
John Kaiser, thank you so much for your thoughts. Thanks for stopping by, and thank you for watching. We'll have more for you on Kitco.com.